Welcome to Property Insurance Claims Fraud Review. My name is Greg Stafford. I'm a multi-line, multi-state licensed insurance claim adjuster, as well as a certified construction project manager. Currently, I'm the claims manager of a department of adjusters handling a wide variety of claims from surety, SDI, property and casualty, construction defect, and more. I recently wrote a 3-part series on employee retention in insurance claim adjusting, how it's a growing problem with few solutions. I've put the links to my 3 articles in the description below, which were posted across several professional LinkedIn forums related to my industry. But one thing I didn't cover in the 3-part series that I published is the impact that employee retention or turnover, the loss of an employee, has on fraud. So I wanted to do a separate video that covers the risk that insurance companies and adjusting companies face when they have regular employee turnover. First, let me share a couple key points from my 3 articles linked below that will serve as a basis for us going further into the impact that employee retention or turnover has on fraud. I pointed out in my articles below, by quotation from an article by Greg Lewis in 2022, that the industry with the highest rate of employee turnover is professional services, which includes accounting, business firms, as well as insurance claim adjusting. I also noted in my articles below that overall, the turnover rate in finance and industry and insurance industry was 25% in 2020, and 43% of insurance talent employees surveyed by Deloitte say it's getting harder to find skilled candidates in a number of functional areas, including claims. That was from a Claimatic article in 2023. And finally, I also noted that the average turnover cost per employee is equivalent to 6 to 9 months of an employee's salary, while others state it could cost up to 2 times the employee's annual salary. So it's clear that employee turnover has substantial financial costs to insurance and adjusting companies. As I point out in my articles below, it also has a tremendously negative impact on workplace culture. But what about fraud? What's the exposure to fraud if a company has a high turnover rate? Well, first, let me point out a few statistics where it concerns fraud from the insurancefraud.org fraud stats, which notes the impact of fraud in insurance, that it steals at least $308.6 billion every year from American consumers. And that figure is up to date as of 2021 with a 2022 figure pending. It also notes that fraud occurs in about 10% of property casualty insurance losses. It goes on to provide a number of other statistics about fraud. In 2020, 8,898 cars were intentionally set on fire. I'll put a link to this article below as well. But clearly, the impact of fraud is severe. The impact of employee turnover is severe, and the impact of fraud is severe. If you have both of those going on at your company, I can't imagine the kinds of difficulties you must be facing. Actually, I can, because I've seen some of these things manifested over the course of my 30 years in the insurance claim adjusting industry. So I know very well the dangers companies face, not just from employee turnover, but from fraud. So how does employee turnover relate to fraud? When I was preparing to do this video to add this element to the discussion, how employee turnover affects fraud, which I didn't cover in my articles below, I started thinking about it. I realized, there are times when companies, and I've had an experience like this with a company I worked for, where you could have employees that have been there for years, that you know well, you know their family well, and then one day you find out they've been committing fraud the whole time. One experience I had was at an adjusting company where a bookkeeper had been there for over 20 years, was well known by the owner, but was committing fraud for a long time. The company didn't really have a good system of checks and balances. So I realized, well, in insurance companies and adjusting companies that are a little bit bigger than that, usually there are a system of checks and balances where you're submitting a report, an estimate, or request to pay to a manager or several managers even. So it's not so easy, right? There isn't one person with all the control and authority to approve something and pay it. Not usually. Whereas in the case that I mentioned with the bookkeeper, that was what was happening. So I don't think the occasional example of someone who's been there a long time or whom you know well, who ends up committing fraud, is a good parallel to what we have in the insurance claim industry. It does happen, but it's far more likely that you're going to hire an adjuster who's determined to take advantage of the position to reach agreements with people on the outside to commit fraud. That's far more common because adjusters have a measure of authority to settle claims, to determine liability, and to write up reports and basically prepare the file for submission of pay or deny. So if you have someone on the inside who is there working with someone on the outside, whether it's in auto, whether it's in property, whether it's workers' comp, it's more common in property in my experience, and auto as well. But property claims are unique because often they can take longer than auto claims. There's more damage involved than a car if a home has been affected. You have the occupants of the home. You have the vendors. You have real estate agents. You have public adjusters. You have attorneys. Right? There's a lot of parties, a lot of people involved in some of these claims where if everybody knows everybody, fraud is really easy. That doesn't mean it can't be detected, but are you waiting to detect fraud after it's happened, or are you trying to prevent fraud from happening? If you're trying to prevent fraud from happening, then you need to avoid the scenario I just described as much as possible, where you have not only people on the outside scheming and committing fraud against you, but you've got people on the inside working with them to make it even easier. And so now you can see where employee turnover can lead to this increased exposure of fraud. If you're regularly losing employees, then all a fraud group has to do is have someone who's friendly with them apply to your open position. Once they're hired, fraud is really no big thing. So to prevent that, it's important that you prevent employee turnover, because then you will have adjusters whom you know, whose work you have seen. Any anomalies will stand out. Whereas if you're constantly going through new employee after new employee, there's just no way you're going to be able to determine what they're all about, what their adjusting philosophy is, and how they actually handle claims until they've already handled quite a few claims. You might be able to see some things early on, but these people are not stupid, not most of them, not when it comes to fraud. So you have to start thinking a little more smart. And one way you can do that without much effort is to not lose your good employees. Now, that's not as easy as it may sound because fraudulent groups know that your good employees are in their way. Right? If you've got an adjuster and fraud groups who are out there and who set up claims, submit multiple claims, and your good adjuster gets more than one of them, if that good adjuster, and by good I mean someone who pays promptly and fairly based on the submitted documentation, what facts are available that show the damages and fair value. You've got a good adjuster like that, and the fraudulent groups can see that adjuster's not going to overpay the claim, they're just going to complain. They're just going to invent and manufacture complaints. I've seen it. I've been the object of it. I know it happens. For about 10 years, I worked as a public insurance adjuster. Now, I tried to adjust claims the way I do now, just based on the evidence, facts, and information. Unfortunately, I was with a company that had some ethics, some morals about it. Not every public insurance adjusting company does, in my experience, because they're constantly trying to exaggerate the claims. Not every company, but many of them. So I know firsthand what is done. I've seen it from that side, and of course, the bulk of my career has been on the insurance company side. But I see both perspectives. I've seen it all in terms of the types of things that happen in insurance claims when it comes to fraud, the types of difficulties that insurance adjusters doing their jobs go through when it comes to fraudulent groups trying to get them fired or in trouble or off the claims that they're not willing to overpay. If you're a claims manager, a director, a VP, anybody in charge of your claim adjusting staff, I'm pleading with you. Do not believe every complaint. You should never believe a complaint until you verify a complaint. They will absolutely manufacture complaints to try to get rid of your good adjuster. If you've got two fraudulent claims and they're both assigned to one adjuster, and that one adjuster isn't willing to overpay those claims or even overpay one of them, the fraudulent groups will just have both of those insureds call and make the same or separate complaints about that adjuster until you get rid of them, or until they're off the file, or until they just quit. They do this all the time. And many insurance companies just fall right into their hands. You not only end up losing a good adjuster, and the impact that we reviewed earlier and that I go into further in my articles below, the impact financially and on your work culture is incredible. But that's just financially in terms of the cost of the employee and to recruit someone else and retrain them. That doesn't include the fraudulent costs or losses that come from you not maintaining your relationship with your good employees, standing by them and with them when someone complains until you know what's going on. You could be dealing with a situation involving fraud when you've got multiple insureds committing fraud and they're lying about your adjuster in order to complete the fraud. And you're falling right into their hands by removing the adjuster that's actually doing his or her job. You might say, well, we don't want to have it look bad later on if we didn't remove an adjuster that someone complained about. Well, I can understand that. But if the complaint is not legitimate, if there's not something you can actually see your adjuster did that was wrong, removing that adjuster from that claim is the worst thing you could possibly do. You're literally doing exactly what they want you to do. You should simply write back and state that you've investigated the complaint, you've found nothing that supports the accusation, and so until you do find something that substantiates a problem with your adjuster, you're not going to make any changes with the claim. It's time to start standing by your employees. It's time to start showing your employees that if they do their job, You're not going to punish them for it when someone who's committing fraud complains about it. And then you'll not only save from losing the costs that have been documented and defined, result from losing an employee, you'll not only keep your work culture and environment from deteriorating because of how you handled a good employee, you will also send a signal to the groups committing fraud that you know what they do. You know when complaints are legitimate and when they're not. And you're not about to get rid of a good adjuster just so they can commit more fraud. So I highly encourage all insurance and adjusting companies to step back when you're faced with a complaint or multiple complaints about an adjuster and ask yourself, are these legitimate? Can you point to things that show, yeah, we got a problem adjuster here? Or are they not legitimate and maybe indicating something else? Because the decision you make at this point with your adjuster, in my experience, is going to determine whether or not you lose a good adjuster, open yourself up to fraud, and potentially hire someone who's there to help people on the outside commit the fraud. There are all kinds of reasons why employee retention should be made a priority and not an afterthought, and why adjusters should be treated better, especially today when we're working harder than ever, not making a lot more than ever, and trying to help you insurance companies and adjusting companies do your job right, pay claims fairly and promptly, and not fall victim to fraud, especially because of employee turnover.